Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I'm going to talk about a huge number of major lenders that have now cut their rates below 4%. Now, the Bank of England cut their interest rate last week, but that doesn't always mean that interest rates, mortgage rates, the rate that you pay is going to follow suit. You see, a lot of the market are already priced in the Bank of England to cut rates. But here's the thing, the market is quieter at the moment. And so banks are getting competitive in order to get your business. We saw this in December of 2023. The market slowed down. January, February and March, rates started to get cut. In fact, I got a buy-to-let rate then with the mortgage works at 3.99% January or February of this year. Now, the market has gone quiet again and they're fighting over our business again. This is good for you as a mortgage holder. It's good for you as a landlord. It's good for tenants as well, because it also means that landlords aren't going to be under as much pressure, meaning maybe rents don't rise as fast as they have been in 2023 and 2024. So before we jump into who has cut rates, and there's quite a few there, then make sure, if you haven't done already, do subscribe to the channel over there and hit the bell notification. We're on the way to 28,000 subscribers now, which is great. Ultimately, I want to get 100,000. How quick can we get there? And while you're here, smash like, tickle like, do something to that like button. That's the most important thing you can do, because that shows that YouTube is listening and the algorithm will push this video out to more people. So let's jump into this. So there's quite a lot of lenders, big lenders. I initially did this research because some of you commented yesterday on the video and I thought, maybe there's one or two lenders that are now sub 4%. On here, I've got 5 major lenders that are now under 4%. I've also got quite a good deal that has no fees. So that's one to look for as well. So Nationwide, these guys have been cutting rates like no tomorrow. Nationwide has been cutting their residential mortgages, which they use under the brand Nationwide, and on their buy-to-let mortgages, they are the Mortgage Works. And so the Mortgage Works has been fairly competitive. They've had some sub 4% rates for a little while now, but the fees have been higher. Nationwide has now got some residential products with fixed fees, 1,500 quid sort of thing, that you can look at. Their best rate at the moment that they've just launched today is 3.99%, just under 4%. That gets them the headline that they're after. It gets them the free advertising and publicity, which is why they've done that rather than 3.95. Under 4%, it gets them the headline, doesn't it? This is a 5-year deal. HSBC wanted to join this club as well. And so they've decided to go even cheaper. This is on a 5-year deal. Interesting, a lot of these better rates are on 5-year deals. What does that show us? Well, it shows us that probably these banks feel that rates are going to drop in the next few weeks, months or years, and they want to keep you at a 4% around rate for as long as they can. So if they can sign you up for 4 years, 5 years, 6 years, they will. So they have a rate now that is decent. It is 3.95%. That's worth definitely looking at. And if you're with HSBC already or Nationwide, it's often easier to just switch to the same lender if it's quite close to another rate, because you don't have to pay solicitors, brokers, and it can be done in a click of a button. With the Mortgage Works that I mentioned that I changed in January or February, I did it online in less than 5 minutes. Next, this is the headline rate. Actually, I'm going to save that one. I'm going to go to NatWest. I'm going to save the headline rate, the best deal. So you stick around to the end. So NatWest, they have a rate, a good rate as well, under 4%, 3.97%. This is for residential and buy-to-let. I always get comments as well with NatWest. People say, I can't get buy-to-let with them. I've contacted them. They don't do it. It's not on the website. Go to a broker. a broker can get rates that you can't get and deals that you can't get. I always go with brokers. I think it's the best way to do it. Next is Virgin. Surprised with this one. So Virgin's rate is 4.20. I'm not sure why they're not joining the sub 4% club. I bet they do in the next 2 weeks. Next is a big lender for buy-to-lets and commercial stuff. So this is a good rate because these are often higher, and this is 4.42%. So Empowered is a good one to look at. Halifax, they wanted to join the party as well. Halifax have got their, same with Nationwide, 3.99%. So there are tons and tons of lenders, and I think this is going to carry on for a little bit until the market really does start to pick up. This is good, positive news. That's what we want to see happen, is competition to get our business. And hopefully some of these deals have got like 1,500 quid fees now. Some of them have got like £2,000 fees. Some of them have got percentage fees. Try and get a fixed fee if you can. And eventually we'll hopefully start moving back towards £500 fees, which we used to have before the pandemic happened. Next, this is a decent lender if you want no fees. The rate is higher, but it can work for some people. So do not just dismiss it because it's that. It's 5.39%. There is no fees on that mortgage. So that could potentially work out quite well for some of you. And so it's definitely worth checking that one out. And the best rate on the market at the moment comes out tomorrow. So it's out on Friday, and it's with Barclays. Oh, and it is 3.84%. That is a decent rate, and that is really going to push these guys, hopefully, to start being competitive. So when we do our roundups and we look at what rates are good for buy-to-let and stuff like that, a lot of these guys, NatWest is often one of the best deals. Barclays is often one of the best deals. So the fact is, these guys want more business. HSBC sometimes features in that. The fact that these guys have dropped to 3.84 means NatWest is probably going to look at that and consider that. Maybe they'll leave Barclays there for a few days or a few weeks, and then they'll cut their rate in order to get more of that search traffic on Money Supermarket and Confused.com and get more business through brokers as well. But look, this is a move in the right direction. Rates are coming down. A lot of people, when we had the Bank of England at 1%, you still had a cost on top of that. So some people that were on a 1%, that basically the Bank of England was at 1%, were still paying 3%. So when they come off their mortgage, there's a third of the country left to do that. They're going to be able to get rates that are more affordable. Yes, more expensive than what they had, but more affordable than what they were expecting. Remember, last year rates were 6.5%, 7%. This is definitely moving in the right direction. I think it will keep house prices a bit more stable. It potentially could stop a crash if they dropped even more. So it's definitely worth keeping an eye on what is happening. Now, we talk about this stuff all the time on the channel. So if you didn't subscribe earlier, do subscribe and hit that bell notification. Do smash like, tickle like, do something to the like button, whatever makes you happy. But that pushes this out to more people on YouTube. Give me your questions, thoughts and opinions in the comments. I personally reply to every single comment on this channel. Do check out all the other content on my channel, including this video right here.